So if I've been given work to audit, ladies and gentlemen, a company, of course, as we normally audit historical financial statements, we will audit the comprehensive income statement for the year ended 2021, historical. But at times in this case here, these organizations will approach us, tell us, hey, we would want to take a loan from Consolidated Bank of Kenya. And what does Consolidated Bank of Kenya want of us? They want us to give them our forecasted financial statements. They want us to give them our budgets, which are what year futuristic, like they could be asking for 6 months budgets ahead. So it's future. Ladies and gentlemen, one thing you're supposed to know about this prospective information in the future, that is, things are very, very uncertain in the future. So there is no way you'll be able to give some good assurance. You can't give reasonable assurance. You can't give absolute assurance. You know, we have got the various types of assurances. We have got absolute assurance. We have what we call reasonable assurance. We have the limited, or in this case here, limited assurance. And of course, no assurance at all, isn't it? No assurance at all. No assurance at all. Now, when we talk of absolute assurance, ladies and gentlemen, this one we can never give absolute assurance in auditing industry. In auditing, you know, absolute means 100% sure. If, for example, somebody was to ask you today whether your son or daughter is going to succeed in the future, even if you have been having this daughter of yours for the last 21 years, trust you me, things change very fast. So there is no way, of course, you can say, given the kind of work I've seen this lady or this young man putting in his life, then automatically this guy it can never be 100% what you are assure. Hata kama ni mganga, hawezi kupatia 100% assurance. Normally we give what we call, if we are quite sure, we give what we call reasonable assurance. Reasonable assurance. It could be like 60%, depending on the evidence that we have collected. The financial statements of our RCM College portray a true and what a fair view. So we cannot give, if it's auditing, we can't give absolute, because remember, ladies and gentlemen, we don't make opinions on the basis of 100% evidence. Our work basically is what to sample. So we may have missed out on an important document. So as from the evidence gathered out of our sampling, we can only give what we call reasonable assurance. Now listen and listen to me very well. Listen and listen to me very well. When it comes now to prospective financial information, there is no way you can give what we call positive. What we call, I know you guys, we have done this before. You can't talk of, positive assurance is when you're saying the books of RCM, the financial statements of RCM Online College portray what? Portray a true and what? Fair view. I'm positive about this. It may not be 100%, I'm not giving guarantees, but I'm positive because from the evidence that I collected out of the samples that I took, right, I can see things are okay, right? Right? So I'll be able to, I'm not guaranteeing, but at least I'm giving some assurance that things are okay. The financial statements of RCM Online College here portray what, right? So I'm very intentional about my statement. For prospective financial information, because it is something that is in the future, which I'm not so sure of what will be happening in the future. I'm not God, right? Things may change. Like right now, we had thought that Corona is way behind us. What are we seeing in the future? It's again rising, right? Which may curtail what our operations in the future. So because it is futuristic, ladies and gentlemen, this prospective financial information, and this is what I want to sell to you this morning, for prospective financial information, the kind of opinion that I will give is known as what here? A negative assurance. Negative assurance. So on a negative assurance, I'm not telling them that the budgets of RCM portray a true and a fair view. No. Under negative assurance, what I'll say is that I've done my audit. I've done my investigations. And during my investigations, there is nothing that has come to my attention. Negative means you start with what here? The word nothing must be there. There is nothing that has come to my attention to cast any doubts over the correctness of this particular budget. For me to be able to illustrate what I'm talking about, I have, ladies and gentlemen, here, some document that I would want us to look at, prospective financial information. This is information, financial information based about future events and actions. We normally call it PFI. PFI work is a highly subjective in its nature, and its preparation requires the exercise of considerable judgment. So before accepting a PFI engagement, agree terms with the company, because in most cases, there will be some expectations gap here, where the directors think that because you are their current auditors, in most cases, this work is given to the current auditors, because they think that you are their current auditors, you should be able to do these PFI investigations and, of course, giving some level of assurance for free. No, so agree, tell them this is a separate job. Let's agree on terms. Number two, get knowledge of the business. If, for instance, you're not auditing them currently, if it's a very new client, get knowledge of the business. Three, clarify the time period it relates to. Very important, get written management representations, representations on, number one, its intended use. The company must tell you what they want to do this budget with. The completeness of their significant assumptions. They must put it in writing that the assumptions they've used are complete and they are feasible. Are they practical? They must put that in writing as a representation. Number three, their acceptance over their responsibility for the PFI. Remember, as your auditor, I'm not the one who is coming to develop this PFI for you. So I would want you to acknowledge your responsibility, that you're the ones who have prepared this PFI information. Then you come and tell me that my role is to audit. My role is to look at those figures and give an opinion as to their truthfulness. Great. So, ladies and gentlemen, here we are. Assurance given. Assurance given. Given the subjective and speculative nature of the PFI, an opinion cannot be given on whether the results shown in the report will be achieved. We can't do that. So only negative assurance can be given. The assurance given is limited and negative usually. So they will state that nothing has come to their attention to suggest that the assumptions are not a reasonable basis for their forecast. So they will state, if it's negative, they will state nothing has come to their attention to suggest that the assumptions are not feasible, are not a reasonable basis for the forecast. Note, there are matters to consider before accepting an engagement. These are, who will use the information? Is it internal or external? If it's third parties for investment decisions, riskier for the auditor, right? Ladies and gentlemen, if, for example, I'm needed to give an opinion about this PFI, prospective financial information, and then they tell me that this information will be used by third parties for purposes of making an investment decision, I know I could easily be drawn into some courts of law in future. So that is risky. I've got to do a lot of work. So even my audit fees then has to increase, right? So we are told, ladies and gentlemen, here, number two, what assumptions have been made? Best estimates and assumptions may have little basis and will lead to a higher risk. Ladies and gentlemen, we would want, in this case here, the assumptions. If it's PFI, for me to take your PFI work, seriously, I would want you to give me assumptions on the basis of 3 sets. Tell me, ladies and gentlemen, the 3 scenarios on the worst case scenario. On the worst case, if things don't work out, this is how we expect the budget to be. So give me one budget showing the worst case scenario. Number 2, another budget with new figures showing the best case scenario, best case scenario. And then of course we have, in this case, the middle one is the base case scenario. So give me the 3. Of course, base is the average. This is the 1, which at the end of the day, I will be able to base my opinion on. I'll base my opinion on the base case. But I would want to see the figures, like if things don't work out, what is the worst? If things in this case here work to the very best, how will it look like? I would want to have that picture. Otherwise, I may end up in this case here giving a limited negative assurance, which doesn't make sense at all, right? Which in this case here will mislead the users of those PFI statements. Great. Now, what elements are included in the information? The auditor must understand the information. Is it budgets alone? I have to appreciate the elements included in the information. How long is the period covered? Don't tell me to give you an assurance of prospective financial information covered in 3 years. I'll not accept. This thing should be short term, 6 months, 3 months. Because 3, 4 years down the line, things will be totally different. Things will be totally different, right? 3, 4 years down the line, Kenya in this case here perhaps would be a tiger, an economic tiger in this area, right? Things may change. Now, ladies and gentlemen, will this information be for general or limited distribution? Limited distribution, I prefer limited distribution. Tell me this information is going to the bank only. I would want a limited, but if it's general, something in this case that will be, for example, published on the dailies, I don't want that. That will be very risky for me. The examination procedures, verifying PFI will be based around analytical procedures and assessing the validity of the assumptions. Possible procedures, possible because there are many. Assess management assumptions. Is it prepared on a consistent basis with historical financial statements using appropriate accounting policies? Are the calculations correct? So I'll have to recalculate there. Is information properly prepared on the basis of the assumptions? Yes. Agree the cash figure to the bank statement or bank reconciliation. These are things we have really looked at, and I'm so sure that my students will not disappoint me when it comes to this. If they're asking this kind of a question in an exam, anything to do with audit procedures of a PFI, I'll write so many things. So many things. Some of them are not even captured here. For example, the management inquiries, right? I would want those management representation letters regarding this PFI. I would want them even to confirm whether they know their responsibility regarding this PFI, to own up that the PFI information is not mine, it's the management's. That my role is only to do what, to look at the figures and give a negative assurance, a negative limited assurance, like that. So many things really I can want in this case here to do what here, to test there. So ladies and gentlemen, we've come to the end of this particular session.